Welcome back. Dubai Islamic Bank reported a net profit of 1.19 billion dirhams for 2012, 13% up from 1.05 billion in 2011. So before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. On top business story, current and upcoming GCC rail projects are estimated to be worth $150 billion. Although in its infancy, the transportation sector in the next 10 years will transform dramatically as the UAE, Saudi Arabia and Qatar focus on linking both urban and industrial areas of the region. The Middle East Rail Exhibition started today and began with delegates from both Qatar and Saudi Arabia sharing their strategic plans for the country. In line with the Qatar Vision 2022 campaign, the same year that the country is set to host the FIFA World Cup, the CEO of Qatar Railways Companies, Saeed Al-Muhannadi, stated that the various railway developments are valued at $35 billion and are forecast to have potential revenues amounting to $38 billion over the next 20 years. Al-Muhannadi added that Qataris need to keep Doha moving, and what a better way than with railway projects, including the Doha Metro and the GCC rail network, which are scheduled for completion in 2016 to full operations of the network in 2019.
As maybe you know, Doha, it is a small country. Most of the 75% or 75% of the citizens of Doha concentrate in an area which is near to the coordination and near to the Doha. And there is also limitation for the expand the road. For that, there was a solution for the railway, for the metro to connect Doha city together, and we believe that this solution will lead to improve the quality of the life and to improve the environment and to minimize the impact for the traffic jam and also will connect the people faster by. If we look on the long horizontal for within 20 years.
Meanwhile, an announcement was made today by Huawei, an information and communication technologies solutions company, on the construction plans for the first railway line in the UAE to stretch 1,200 kilometres by the end of 2017 and cost approximately $11 billion.
Of course, there is a lot of things going on here in the UAE, in Dubai and Abu Dhabi. So here we have actually one of the biggest projects in the region, currently under design phase and implementation. This is the Etihad Rail project. That's a huge project. The first phase has already gone last year, and as Huawei, we are quite proud to be involved on this project as the telecommunication official supplier for GSMR. And for sure it's going on. So two phases are coming. Now phase 2, it's under bidding and procurement process by Etihad Rail. And in the future, very soon, the phase 3. So a lot of things going on here.
Dubai is a leading light in the railway industry in the Middle East because obviously the Dubai Metro is the first up and running project. But in the last 5 years, we've seen a big increase in the number of rail infrastructure projects that have been planned for and put into tender across the region. Our market report suggests about $150 billion worth of projects across the GCC. The two most exciting regions outside of the UAE are, of course, Qatar, with its projects for the World Cup, totaling about $40 billion. And, of course, the Saudi project market's about $40 billion in the railway infrastructure. So they'll be the two biggest markets outside of the UAE for us.
The total UAE non-oil foreign trade climbed by 70 billion dirhams to hit 678 billion in the first 8 months of 2012, rising at 12% from the same period last year. Statistics of the Federal Customs Authority show that exports rates rose 49%, with the total export hitting 112.8 billion dirhams compared to 75.5 billion in the same period last year. Imports jumped by 11% for the period, reaching 431.7 billion dirhams. Asia, Australia and the Pacific remained the UAE's top partner in non-oil foreign trade, reaching 284.8 billion dirhams, 43% of the total trade. Gold topped total global imports with 87.4 billion dirhams and also for exports at 64.6 billion dirhams, while diamonds came top of re-exports with 26.4 billion. Business confidence is on the rise, as well as increasing activity across sectors such as trade, tourism, manufacturing and real estate. That's according to the 2012 fourth quarter business survey by the Department of Economic Development. The survey showed that 66% of companies forecast improved sales revenues and 61% predict higher profits during the first quarter of 2013. The Composite Business Confidence Index for Dubai reached 135.9 points in the last quarter of 2012, a 10.8% increase compared to the previous quarter and a 2% growth from the same quarter of 2011. Trading firms had the highest expectations, followed by services and manufacturing firms, off the back of the Dubai Shopping Festival and hopes of getting new orders or projects. Additionally, 27% of the businesses revealed plans to increase their workforce in the first quarter of 2013. Over 2 million mobile phone users entered the UAE market in the first 11 months of last year, driven by attractive offers from Du and Etisalat. The official data from the Telecommunications Regulatory Authority represented the largest annual increase since mobile services were introduced into the country. The figures also showed that total users peaked at 13.75 million at the end of November. Analysts say that another factor that can be contributed to many phone users who frequently change their handsets for upgrades, especially Emiratis.